Hi everyone, this is Anna from hotoptionbabe.com and optionsblackboard.com. I have a chart up here of micro devices, AMD, that we did a trade on in the Options Blackboard chat room. And what we did is the day before earnings, AMD was trading around $10 and change. But looking at the chart here, and it looks eerily similar to Google if we go back here. Got another little head and shoulder, one of my favorite patterns to trade off of. Doesn't always play out, but a lot of times it does. A lot of sideways consolidation. And again, I go to the indicators on the bottom. We have the DMI, which is, the stochastics, which are pointing down. The oscillators just going sort of nowhere as far as volume. The relative strength indicator is pointing down. And so what we did, and we did April, so it's gone. Sorry, next time I'll do it the day before so we can at least see the risk graph. But we sold a $10 call and bought 11 for protection, and we brought in a credit of 40 cents or $40. And times how many minute contracts you did. Our objective was for Advanced Micro to land at below $10 for expiration. And as you can see, it landed at $9.81. So we were able to keep the entire credit spread, or number of contracts times 40. If you did 10, you would have made $400. If you made 20, you would have made $800. Now, why did I choose that? First of all, there was a huge amount of implied volatility on the options on both sides. So I wanted to capture that on the closer strike. The closer strike you are to the stock price, the higher volatility normally will be. And I also wanted to catch the theta, or the time. It was going to expire in April, which was yesterday. So if I could just get it to be out of the money, I would be able to keep that entire premium that we brought in as a credit spread. So we sold to open the $10 April call, and we bought to open the April $11 call. So that was for a credit, and this is called a credit spread, of 40 cents. So what happened, you can see that Advanced Micro gaps down. Let me see if we can find the 2-day here. The 2-day, it gapped down, as you can see nicely here. We continued down, a bear flag continued down, sideways. Then it gave a little pop. I was watching this a little bit in here to make sure it didn't, but I wasn't too worried about it. But this is when we had that intraday pop right here when Kramer came on spouting that Goldman Sachs they were not crooks, and they were long these trades that supposedly they were shorting the subprime market. Well, the truth is that was only their hedge. They were actually very short subprime, so they might have lost a few million, but they made a few $100 million on the other side by shorting subprime. So I think that's going to be our correction and a catalyst for our correction for the next couple of weeks. So I'm looking for anywhere between 5 and 10%, maybe 8%, possibly up to 10%. Anyway, here we go on advanced. Back to this sideways, close the trade out. It's done. Both go out worthless, and we get to keep our $40 per contract. So there we go. We have another excellent trade that we did for earnings in the Options Blackboard chat room. So on to Intuitive Surgical next, and thank you guys. Have a really great day.